Now that world in terms of a medical crisis is frozen and financial markets are in a state of shock, it is going to lead to a chaos, and the chaos is leading to a financial disruption. And typically these financial capitulation, they do not end very nicely. For really classic long-term investors, they make great entry points, and it may be a great entry point if you have a 2, 3, 4, 5-year view. But if you have a short-term or a view purely based on market bottom, please don't have that. If you cannot digest 15-20% for more further decline from here, I hope it does not happen. Please don't be in this market. These are times where you definitely want to reassess risk. I will not advocate that you should go and start buy gradually. These are unusual times, and unusual times require unusual strategy. I don't know the extent of job losses, what will happen to a lot of sectors, how NPAs would spiral up. I don't know what will happen to the sovereign funds in terms of the money. Right now, everybody is selling, and that is leading to some degree of chaos. Thankfully for us, local redemptions have not started, but if this kind of an carnage continues, that cannot be ruled out. Manish, everyone has come on the channel, and I respect them for their frank opinion here, that do not panic and buy. And post their comments, markets have gone down another 15-20%. Everybody is saying that, look, it's time to buy systematically. But my question is, where is the cash left? For someone who's fully invested, what should one do?
Yeah, so for someone who is fully invested, the whole situation is that he has to hold it out. Not panic and get out of the markets at these levels. We are somewhere close to the bottom, if not the bottom itself. It's very difficult to say. The situation is still evolving on a daily basis. It's the fear of the unknown. I think the situation will only reverse when you have lesser number of cases coming out of these European countries. Today, there is a fresh development that, South Korea has seen a spike in the coronavirus cases. So I think it's what you know and what is getting priced in is what is more important. And what we know currently is that it's a 10% earnings cut on FY21 based on the situation that we have before us. So let's see how the situation plays out. I don't think it is a case of selling as of.
Manish, for those who are saying that it's going to be a 10% cut, are they being slightly conservative? Because we don't know the extent of damage. If banks have come down, they'll have problems in raising capital. If hotels are shut, there would be job losses. If transactions are not happening in the hospitality industry, that will lead to a drop in consumption. So how does one figure out what is right and what is wrong in this kind of a market where quantitative easing and fiscal measures from government are not working?
Yeah, so governments will have to bail out specific sectors. That's for sure. You can't really, that is what we are seeing globally. Governments come out and provide stimuli, particularly to those sectors which are impacted, the hospitality, airlines, tourism. These would be directly impacted. In India also, we should see somewhat of the same. In the case of the banking sector, it is a fear of that the Yes Bank effect, that deposits are going to run out of the private sector banks. And that's basically manifesting in terms of prices. Of course, growth itself would come down, but that's more or less getting priced in also. So again, it is a fear of the unknown, and one has to really wait it out to see how the entire situation plays out.
Yeah. So what do you do as an investor right now, Manish? Do you start drawing up that list? And, when I'm looking at the screen right now, a Bajaj Finance, which is down about almost 12%. You've got the blue chips of the blue chips, which are falling like 9 pence. Bajaj Finance is now around 13%. IndusInd Bank, this was so sought after just till a quarter back. It's down another 10%. Kotak is down 10%. There's HDFC Bank, which is down about 9%. And the individual market prices that these are dealing at. How is it that in this market, do you even justify what's the right valuation and what's a good price to get in?
No, so, the fallout of this entire episode tells us that financials weightage, it is roughly around 35-40% in the index. One needs to go underweight financials per se, because obviously, one of the damages of this corona thing is that there could be some retail NPL cycle cropping up sometime very soon. I mean, if this was to last even for a matter of 3 months or so, we're already hearing that EMIs on housing finance loans are not getting paid, so on and so forth. So, this financials overweight at 35-40% of the index. One would do well to slightly go underweight, and that's basically what is getting priced in. But having said that, individual companies have really fallen to ridiculous levels, so to speak, and that's all that I can say at this point in time. And one who can bear the storm and see through this whole crisis ultimately will come out as winners. I mean, in my last 25-30 years, we have seen somewhat of like this sort of a phenomenon. Of course, though not strictly comparable. So, I mean, if everybody is selling, then, I mean, if markets fall 1,600 points every day, then at 27,000, literally in 1 month's time, we should all come to zero, isn't it? That doesn't happen.
Manish, what about the kind of earnings impact that this is going to have? Because without a doubt, the ramifications of coronavirus will be felt across businesses. So what are you factoring in for the next couple of quarters?
So FY21, we are building in a 10% earnings cut as of now. And if this situation was to last longer than this, then we could build in slightly higher. But I think, 13 to 15% sort of an earnings growth is still part of the course, given what the situation is for FY21. And this is building in a slight recovery from the second half of this year. But the situation is still evolving. We need to figure out how this situation.
We just got 7,900 now. Okay, so the sell-off intensifying. I want to understand, on the domestic redemption front, what's managing to kind of curtail that? Give us a sense of, how much pressure there is on that front, because till now we've been hearing that it's more on the back of FI selling and that huge rush to sell, but domestic investors are still treading water. Has that situation changed? What's the latest there?
So our inflows are more than the outflows currently. I mean, so this shows the degree of maturity on part of HNI investors, at least, that they have not panicked. So, even till yesterday, we had more inflows than outflows. So everybody is just waiting out to see where this whole thing ends, and the wait and watch thing. And I believe that if markets were to reverse, then some sort of sanity would prevail. Today we are in chaotic times. I mean, nobody is able to think straight, at least the investors, so to speak. But there is heightened degree of maturity, I would believe.
Manish said that, we'll actually see some companies fail in light of the impact of this. And while that could at the moment be speculation. But, I'm just trying to understand when you say there's no panic, I think that's great. But aren't there any concerns or questions being asked as to the extent of the impact? What if it's not just about a recessionary scenario or a couple of quarters? What if we see a deeper impact on some of the major companies?
Yeah, so as I said, that it's a fear of the unknown. As things stand, we are looking at a 10% earnings cut for FY21. March is almost ending. So this year we should be building in FY20, we should be building at something like a 5% sort of an earnings growth, and FY21 a 10% earnings cut. Now look at valuations, 50% market cap to GDP. I mean, historical Ps at around 13 times 1 year forwards, trailing Ps at around 17 times. Trailing, I'm saying FY20, we're almost ending FY20. So that's almost like 17 times. Historical decadal averages are something like 18.5 times. These all earned numbers. So, I mean, do these matrices hold? Ultimately, they will hold. But, how much down we go before we go up is the moot question that needs to be answered.
Manish Sonthalia, appreciate your time. Thank you for joining us.